Good afternoon, traders. Joseph here from Eightcap. So welcome to Friday afternoon's wrap, where we just take a look at the week that was, and we'll have a look at anything coming up before the weekend's trade. The weekend session, wrapping up trade for the week. So one of the more interesting things today is that we didn't see Chinese GDP, which was meant to come out this week. It was moved from yesterday to Friday, and today so far. We haven't seen a release for it, and now I might be just seeing things, but yeah, it looks like it's been removed from the calendar. So we'll have to see if that is rescheduled, and I was quite interested to see that data because it was forecast to come out at plus 3% after, but I just don't see how that was going to be possible with a lot of the negative impacts on the Chinese economy, with all of the the constant with the zero COVID policy and lockdowns, etc., and how that's been affecting the economies and the local economies in China, and how they could have seen a 3% growth. So it'll be interesting to see if we can see that data next week, and if we do still see that 3% increase in GDP that was forecast. Now, one thing, so there's not a lot coming out tonight. We have Canadian retail sales, we have pound retail sales at an hour before today's London session kicks off, and yesterday we had a miss on the Philly Fed manufacturing index that was at negative 8.7 when it was forecast to come in at minus 5, sorry, and Australian employment job creation was weaker, while so the unemployment rate was flat at 3.5%, and Canadian CPI did come in stronger than expected, apart from the median year on year, which came in slightly less than expected, 4.7%, but it still looks like the Central Bank of Canada will have to act, and we'll be looking to see their next statement to see what their view is on rates moving forward. Now, last night we had further hawkish statements coming out from Fed members saying that inflation still remains too high, and that action will need to be taken, and it could be in the form of high, strong interest rate hikes. So this did have, whether it was the main factor or one of the factors, this did send US stocks lower, and we saw a fight back on the USD, which continues today. So we can see that bar here, and sorry, itchy nose whenever I come on camera. Sorry about all the scratching. So we saw that pullback yesterday. We are seeing further buying today, and we are going to do another report a bit later on the Aussie and the Euro. But you can see here that we are looking. I'm looking at the Aussie dollar, the Euro, and the pound. They do look sort of primed for potential moves lower. Now, we'll get to the pound in detail. Obviously, the Prime Minister of the UK resigned, and that was after 44 days in office. I think it was the shortest in history for a UK Prime Minister. As we'll just quickly look at the pound, with all the uncertainty and everything going on in the government at the moment, we can't really see that reflected in the currency right now. So if we look at that compared to the euro, there's really not a lot of difference between the two of them. Again, I hate to be a broken record, but saying this at work and etc. with other people, is it really still is all about the US dollar. So the US dollar continues to go up, and we see risk currencies, the pound, the euro, and the Aussie continue to fall. So there was a small push higher yesterday that did reverse. Now, that could be due to some of these comments about rates that did help the US dollar fight back. But at the end of the day, we just continue to see this relationship with a higher US dollar and weaker risk majors. So we'll continue to follow that and see that as the key, dictator at the moment while we're moving forward. And that's the real influence that I'm watching and keeping an eye on at the moment. So we can see that the trends are down for risk currencies, and the trends for most US dollar pairs are up. Now, we're going to get onto the dollar yen in a moment, but first things first, I just want to cap off here. We will do a more specialized report on the Aussie later. What we are seeing here is this failed high. That was after yesterday's rally that failed. We're seeing weakness here. Now, the key for me is if we see a break of this point here, it could signal a new position lower and another continuation lower. So we can see that nice little consolidation here. We saw a similar pattern back in September, and we're seeing a similar one at the moment. We just need to see that, real push down now just to confirm it. And we had our push down there, and we're now just waiting to see if we do see another one here, and that will look like history repeating itself on the Aussie dollar. Now, the euro, We have that higher low. It's slightly, the picture's looking slightly stronger than the Aussie, but again we have a failed rally here. We have this rally that's also topped out resistance up at 98.57. We had that move lower, that failed rally yesterday, and a new push. So if we see a break below this point here, we're definitely thinking that maybe sellers will try and test this support point at 96.88. That's if USD momentum can continue higher to feed the sellers and maintain that momentum. The pound, quite similar story. We had that failed rally yesterday. We have this resistance seen here at 1.1357. Like the other two we've just been speaking about, we see some intraday selling at the moment. We'll be looking for a break at this point here to signal a new push lower, and would again, like the euro, if we do see selling really take off, we'll be looking for a possibility of support to come in at 0.968 on the proviso that the dollar momentum does continue, and we do see dollar bulls continue to fight to push price higher. So at the moment, the dollar index is up 0.21%. The dollar cat's trading 0.16% higher. Oil is trading 0.13% lower, which is also adding to dollar cat buyers. Now, with the dollar index, we can see the support here. That's at that 111.90. The resistance is up at 113.37, and then we have further resistance at 114.30. So the key for dollar bulls is they have to break this resistance here. If we break that, we'll be looking for potentially a move up to test that 114.30 area. And the dollar yen, which has been like a real amazing story of this entire year so far, really. So we saw 150 was beat yesterday, and we're seeing 150 beat again today. So the question is now, when does the Bank of Japan intervene? There is speculation that they're going to. Nothing's really concrete yet, but a lot of people are thinking that this is a point now where we may see intervention from the Bank of Japan. But at this stage here, we're seeing this fresh move up, and we're seeing it's nearly midpoints in the the 150 points. So I wonder, if we did see a real burst higher, possibly 100, hitting that 151, if we do start to see more talk up about the Bank of Japan possibly coming in to intervene. So definitely keep an eye on the dollar yen. This is, as you can see here on the daily chart, it has been really the big story of this year, and we can see really from the start of the year all the way to this current period, it's just been one fantastic uptrend, and a lot of people have been calling it the gift that this keeps on giving in 2022. So if you do have any comments about this one, please let us know in the comments field. Feel free to let us know when do you think that the Bank of Japan will intervene. Like, obviously this has to be having a real big impact now in Japan with how low the yen is in terms of savings, and with all their pension funds, etc. So please let us know what you think, if you have some thoughts. Now, moving on to first, we're just going to have a quick look at oil. So I kind of liked oil yesterday. It did rally, but that rally was stopped dead in its tracks. I did think with a lot of the talk going on between Biden and OPEC, Biden did signal that he's going to put more of their crude stockpiles into the market to sort of help crush the price, to help push down inflation. This is after OPEC said that they're going to cut production. So there might be a bit more going on in this story, so we'll have to keep an eye on oil at the moment. I like this higher low here. There was a trend break. Everything, this was a bit of a long drawn out retracement. So that was a small worry, but yeah, we'll just have to see if all buyers can hold this level from 84.92 down to 83.75. If we saw a breakdown to these levels and a break below this point here at 82.12, that would be a bit of a worrying sign. That failed high is a bit of a worry as well, and sort of it's telling me that to probably stay out of oil for this stage at the moment. Now, just going on to stocks before we just wrap up and have a look at some cryptos. Stock indices fell for a second day overnight. You can see the German 30 here. We'd like to see if some support can come in this area here. Otherwise, we could continue to see stocks as bearish. With this, after this rally up, we may see a bit more of a pullback, and maybe even just a push low that could be pulled back from by buyers if they can find some momentum. But again, I think that comes down to some of these comments from the Fed members and how the market feels about that, and if they are going to continue to be overly worried about what does that mean for future rate hikes, and if there is going to be Fed policy to continue to raise rates aggressively moving forward. So again, as mentioned before, we did hear further hawkish comments signaling that the CPI data and inflation data is still too high. They're not comfortable with it, and they do see aggressive rate hikes as a way to cut that CPI and inflation down. So over to the US 30, we can see today we are seeing further selling. Again, we were wondering if we were going to see some support here around that 32.73. If we see a breakthrough that 31.50 area, then we'll be looking to see if price can find support inside that 30,000 area and not drop back below it. If it does drop back below it, that could be a small worry that price could be going back into this consolidation that we did talk about previously on Monday's video. Now, finally, we're just going to have a bit of a chat about the Hong Kong 50. Yes, the UK is in issues, but Hong Kong is also having its own issues, and it's gone from one of the most attractive places financially in the world to something that now that they're offering people free flights and stamp duty reductions and stamp duty cashbacks if people do come back to work there. So they're really trying to pump up Hong Kong again. There's been a mass exodus from the territory, and now there are steps being taken trying to stem some of that damage and bring people back. And this was really reflected yesterday. We can see here that the index did drop to 15,967, which is lows not seen for a very long time. So at the moment we are seeing a little bit of support starting to step up just here from that 16,176, but we'll need to see a lot more to signal that potentially that this trend has sort of come to an end. So it'll be interesting to see if we can see a bit of a bounce on the Hong Kong 50, or if we just do see another extension lower, pushing price into lows, further lows not seen in decades. So now just finally, cryptos continue to stay range bound. We did see a tiny bit of movement on Ethereum and Bitcoin, but the picture stays the same and it's pretty boring. We can see here these flat out ranges. Support once again remains on Bitcoin at 18,823. As long as we hold above that, we just look for this stalemate to continue. A break above that 24-23 area is a positive for price, but a break below that support area mentioned is a negative. But we've seen a few attempts. That was the previous week, and that was snapped up pretty quickly once it got down to these levels. And with Ethereum, it's quite a similar story as well. We've seen one attempt lower, but it's been sucked back up, and we're just seeing this support at that 1,275 area. And we will touch on Ripple, because Ripple is a bit of a darling for the last few months, and we are seeing a pretty aggressive pullback at the moment. We are back down at a level that has shown previous support, so seeing some buying today. We would like to see if this level can come back into as support, and that's at 0.43. If that does fail, potentially we could see a move back down. Maybe we could see a move back down to that 39 area, but I think there would need to be something else really to push the market lower to give that momentum. So, and again, Ripple's been influenced quite heavily at the moment by the SEC case as well. So that will continue to be a leading factor for Ripple. Now, just finally on ADA. So ADA did hit some new lows yesterday. I'll just update that. And it is a bit of a worry with Canando at the moment, and we can see a break. We are sitting at new 2022 lows after breaking that 37 area, and we can just see here that we've fought back from new yearly lows today, but the pressure is still there. We are a fair way off the moving averages, so there could be a mean reversion, but there would need to be something pretty positive to drive that. So continue just to look for potential little lower highs like this to feed new selling if things still do remain negative. Now, if we did see a big rally, we'll be potentially looking at the 41-43 area as of resistance. But in terms of the top 10, if ADA is still in the top 10 on market cap, it's definitely struggling the hardest, having the hardest time at the moment. We can see that there. Now, we'll just leave it there. So again, tonight, maybe tonight news-wise, again, Canadian retail sales, UK retail sales, and we have the FOMC member Williams speaking at 12:10 a.m. Australian Eastern Daylight Time. But none of these are high impact. The CAD and UK retail sales are both medium impact. But with the uncertainty that's going on in the UK at the moment, Anything there could have an impact on the pound, but as mentioned before, it hasn't really shown much of an impact on the Great Britain pound for now, but that could change going forward. So sorry today's video is so long. As we always mention, please keep up to date with our updates, and we have guest seminars during the middle of the week. They do fantastic presentations and reports through their live video casts through YouTube. And we'll wrap it up now. So we wish you the best for your trading for the rest of the day, and we hope you have a fantastic weekend. And until next week, bye for now and enjoy.